How are you doing today? Hey Mixie, hello Vlad. Hey Zach, Tony. I'm doing well. Guys, just a quick reminder. Make sure that the pictures are posted in the off-topic chat, just so that I don't miss them there, okay? Perfect. So, how did you do today, guys? Hey, Gigi. Green Laszlo, amazing. Green is always good. Green Avi, just watching, slightly red, green and great. A lot of greens right there, but it's okay to be red as well. Today might be red, tomorrow green, and the other fellow will be red, right? Slide red, it's okay. It's totally fine. As long as you're respecting your rules. Don't be bothered by being red, but you can be bothered by being red only because you broke your rules. I just keep saying that every trade review to remind you of your rules, guys. That's good, Nagaraj. I had 2 Hulk day last month. Laszlo, did you try to implement the dash risk controls? I'd recommend you try that. It does allow it, just email them. Tell them that you want to be stopped out at, for example, $100 loss for the day or $150 for the day. Once you reach that $150 or $150 or whatever amount of risk, they will close all your positions and you will not be allowed to trade for the rest of the day. We have a few members from CMEC who already implemented that. That's smart, Sertra. Alright guys, let's start. So GG traded Baba. It was a inverse ABCD pattern. I actually took this thing to the long side. I took it to the long side. Where did I take it to the long side? I don't really remember where I took it to the long side. Let me check. I need to close this. Let me close this and let me check Baba. Yeah, I took it to the long side here. This candle right here, I took it to the long side and I exited at break even. I added above view up and I exited break even. But let's see what you did on it. It dropped down, gave you one reverse ABCD pattern, and then it's pulling back, rejecting the 20 moving average on the 5-minute chart, dropping down, making a new 5-minute low. On the 1-minute chart, we're having an M shape, which we'd love to see, right? After a move like this, the one thing I might be concerned about is a stock dropping down or pulling back, breaking view up, and continuing to uptrend above view. This would scare me out. Because of that, I love seeing an M shape. An M shape is basically a confirmation that this price action here is not happening, and it's confirmation that this price action is happening right there. So you are taking it to the short side, which is amazing. But why did you exit here? Hotkey mistake, or did it get you scared out? Because this is the stop loss, right? Remember, when you're getting into any pattern, literally any pattern, your stop loss, especially within the range, one thing, if it's breaking the low of the day, the high of the day, there are different rules for stop losses there. But if you're getting in for a trend which is within the range, and this is definitely within the range, if you look at this, or even if you look at this right here, or even if you look at this low right here and this high right here, it's within the range. No matter what your entry, within the range, your stop loss should be either the level where it bounced off or the high of the range, or at least the tightest thing, the last wave, the high of the last wave. So here you are entering an amazing entry after a good confirmation candle, Good stop loss. It didn't even go against you, right? We can't expect the stock to just immediately dump the moment we enter. We can't predict the future, right? We could enter here, it could go a little bit against us and then work in our favor. It could just consolidate a little bit and then work in our favor. Just a lot of possible plays could happen, right? So no need to just bail on the trade, especially that it didn't even make a new 1 minute high, right? It's not that it didn't go past your above the last wave. It didn't even make a new 1 minute high. Your entry was amazing, really good, and then you are re-entering. When you are re-entering, your stop loss would need to be the same. That's the problem. Now you are getting in with a worse entry, right? But the stop loss will be wider. If your stop loss at the beginning was 20 cents, now your stop loss will be somewhere around, I don't know, 30 cents, right? And if you're 2 to 1 we're at 40 cents, now you're 2 to 1 at 60 cents. With the first entry, you could have got 3 hours after this move, right? That makes sense? Now look at this. It's going in your favor, which I like. I see that you added right there. And this is, yeah, this is not a bad ad. In my opinion, this is not a bad ad. It's dropping down. It's clearly close to the 9 moving average and the 5 minute chart. You are adding for the breakdown, but unfortunately it just gets swept out. And this was my entry to the long side. Let me show you my BABA trade quickly. BABA. There it is. The moment where you got swept out, I decided to take BABA to the long side. I had this level right here, which it held. And this is actually the main reason I didn't take it to the short side. I had this level here and I like the pattern on the 5 minute chart. Reverse ABCD pattern, curling below the 9 on the 5 minute chart. But I noticed it's clearly bouncing literally of this level. 289.80, 1 time, 2 times, 3 times. I didn't draw it here. It's a level from somewhere before. I don't really remember when I got this level or where I got this level from. But anyway, I see that it's clearly bouncing out of it. And I told myself, instead of rushing it against the level, which is clearly being held multiple times, right? It held it there, it's holding it here. I would wait for it to break it. And if it breaks it, I could get in and have a little bit wider stop. I see that it's going up. Unfortunately, I missed the entry. FOMO chase entry. Adding to my position right here. My target was the next level I have right there, 292 to 20. It's going against me and I'm exiting. That was a small loss actually. It wasn't full loss even. Now, let's take a look at the second trade we have there. By curling, I mean that it's making lower lows and lower highs below the 9 moving average in the 5 minute chart. This is what I mean by curling. Like, it's just making lower lows and lower highs, hugging the 9 moving average on the 5 minute chart. This price action I love for breakdowns. Now let's see what Vlad did. Vlad took a long on DVA. You entered just as the price pierced that 81 level a little and bounced back. So his confirmation was the price breaking the round number 81, bouncing back up. We're having a climactic volume at the low of the day or increasing volume at the low of the day. And no daily level there. So personally, I wouldn't get this entry for one reason. Yes, we're having the volume confirmation at the low of the day. We're having the round number confirmation, but there are no daily levels and no new 1 minute high. It is extended from the 9 on the 5 minute chart, which is good. Depending, I might take it depending on the level 2 or the price action right there. If it's clear, I would take it. But unfortunately, I am seeing just a picture here, so I don't know how it behaved around that level. Looking at what I have right here, my entry would have been at least a new 1 minute high. Stop loss at least below the body, right? Not the low, but at least below the body. Then it's going in your favor. You're partialing at 2 hours, more partials, and exiting most of your position closer to the 9 moving average on the 5 minute chart. And the rest, once it started forming a reverse ABCD pattern against you. So I love the execution. Oh, there is a daily level. All right, now that's good. This is actually the exception in the webinar, right? A daily level, increasing volume, extended from the 9 moving average in the 5 minute chart. And if the price action shows that, you could enter even without a new 1 minute high. We mentioned that in that webinar. So yeah, good job then. Zach, let's see what you did. So Zach traded NKLA. What he liked is the 1 million shares traded in the pre-market, uptrend in the pre-market, and we could see that, right? It's not a clear uptrend, but I could see that it's above all the moving averages right there, and the moving averages are sloping to the upside. Before the market open, I definitely don't like the price action. Up until here, this is definitely a clear and good uptrend. Before the market opened, it started making reverse ABCD pattern to the bottom side. This is something I don't like. It started going below the moving averages, which I also don't like. What I like about it though is this. This is my favorite open range breakout pattern, and I mentioned it a lot. I want to see the stock dropping at first, breaking any level we have, like the low right here, the low right there, any level we have. I want to see it breaking it. After the breakdown, I want to see it coming back up, and I would enter either on the first minute or the second minute for 1 minute open range breakout. The problem here is that we're making lower lows and lower highs, so I wouldn't be sure how far it could go in my favor, right? This would be a level right here, and I love that you took your partial right there, because it could have just simply bounced out of there, making a lower high and dumped against you. So yeah, this was a really good partial right there, exiting the rest once it did a fake breakout and dropped back down. Okay, let's see Dan traded work. I mean, I got out a break even after it bounced off the 9 moving average on the 2-minute chart because my fill wasn't the greatest. Would you have held it? Okay, so let's see what you have right there. Yeah, the setup was perfect, right? Extended from the 9 moving average on the 5-minute chart. Increasing volume at the high of the day, not climactic but increasing. Reverse hammer at the high of the day, or shooting star with a really small body. Getting a good entry. I wouldn't say this is the worst entry. Sometimes it's just, if you get these type of candles at the high of the day, you either enter before the new 1 minute low, and this is what I'm doing. I don't wait for a new 1 minute low. I enter before it makes the new 1 minute low, because the moment it makes a new 1 minute low, you'll get slippage. Most of the time you'll get slippage, and this is why I wait for it to go against me. Once I see that this candle is white and it's turning back down, I would take it to the short side before the break, just to have a better risk to reward, and then see what it's going to do. Your entry still was good. It's still not bad. You would have what, 5-6 cent stop loss. It's definitely good. I wouldn't exit here. Remember what we said? These type of stocks, they could drop down, make a double top at the second top lower than the first one, and continue dropping down. If you look at your journal, especially if you're trading this setup a lot, you will notice that this right here is happening a lot. Dropping down, bouncing, coming back down. The price action which I would hate to see is this. It's dropping down, holding, curling like this, and then coming back up. Now this I would hate. You will have a lot of candles right there. A lot of candles right there, a lot of candles right there, which are showing you that the price is being held, and then it's making a new high, getting you stopped out. In this case, yes, I would exit at break even. But if it's dropping down, sharply coming back up, I would hold it to my original stop loss. If I enter before the new 1 minute low, it will be just 1 cent below the high of the day. Just so that I don't get slippage. Sertra, we all use, or most of us are using the 9 and the 20 EMA, and the 50 and the 200 SMA on all the time frames. All the charts having those moving averages. Some of us are also using the 100 SMA. Alright, Laszlo traded NIO, and you traded this thing to the long side, I see. Yeah, I wouldn't have traded it to the long side at this stage. Why is that? Overall, looking at the 15-minute chart, it's weak, right? Looking at the 15-minute chart, overall it's weak. Looking at the 5-minute chart, overall it's weak. Dropping down, pulling back, dropping down. If I would take it to the long side, anyone? Yeah, let me ask you, where would you take this thing to the long side? Where is the best entry to this thing to the long side? I know that the best entry is here if you could catch it, but what is the best entry in technical ways? Break of view up? Not really. I wouldn't go for break of view up because look at this. This is a huge move right here. You definitely don't want this to be as your stop loss. Anyone? Around 11 o'clock. Alright, yeah. Exactly. I like this. I like this. Now look, I'll tell you why. First of all, you're having a high, you're having a low. You're having a high, you're having a low. At this stage, you see a clear downtrend, right? At this stage, you're having another high, which is lower. It's still downtrending from the upper side. Here, you're having a higher low, right? Which is showing you that from the bottom, the stock is actually or might actually be reversing. Having a higher low is not enough to determine your entry. So definitely you're not getting into the long side of this candle only because you're having a higher low. You need to see a change for the trend from the upper side as well. We're having this high, so basically our entry will be the moment it's breaking the previous high right there, which is somewhere around here. In this case, you could take it to the long side here, and you could put your stop loss somewhere down there. Now look at this. This is, I don't know, the 200 or the 50 moving average. 200 and 50 moving averages are strong moving averages, and stocks, especially stocks which are trending, they respect those moving averages. That's why I don't go against those moving averages, especially if they are horizontal. When I get my entry right there, I'm 100% taking a partial right there. Now, looking at this, you're having a higher high, which is amazing. You're having a higher low, which is amazing for the trend. But I'm definitely not taking this thing to the long side unless it's breaking this high right there. Unless I make sure that it actually broke the moving averages and the trend has really changed, right? Because this small change wave right here could be a reverse ABCD pattern on the 15-minute chart, right? The moment you see that the trend also changed in the 15-minute chart, and to see that the trend has changed in the 15-minute chart, you need to see a higher low, which we're having right here, and you'll need to see a higher high, right? Now, the moment you see this price action, which is actually this price action, right? The same thing we saw on the 5-minute chart. The moment you see it on the 15-minute chart, it might mean that it's on a bigger time frame starting to reverse, and you could add for a bigger move. But for now, it's still downtrending on a bigger time frame, but you're going in to the long side on a smaller time frame. Hopefully that was clear there. You're welcome. So let's see this trade. This is so clear. I love it. What do we have here, guys? Two setups combined together. Let's see if you can see them. I mean, a setup on the 5-minute chart and a confirmation on the 1-minute chart. Exactly, Ivan. So what do we have here? You're having an ABCD pattern. This is amazing. Buying pressure, buying pressure, buying pressure. The wicks are showing you a clear direction of the move, right? Like 4 hammers in a row. What more do you need than that, right? Now you see a setup on the 5-minute chart. You need to catch a good entry on the 1-minute chart. There is an ascending triangle. 1, 2, 3, 4, right? 1, 2, 3, 4, right? An ascending triangle, and at the break of the ascending triangle, you are getting your entry. Could put your stop loss at the low, because you're getting in at the breakout, partialing at the high of the day. You actually bailed on at the high of the day. I wouldn't exit at the high of the day. Remember that ABCD pattern is a breakout setup, right? So if the pattern is really strong, it will break the high of the day. Taking a partial at the high of the day, just as a precaution, is definitely smart, but you don't want to miss the pattern. When you're in a good setup, you need to use that setup as much as you can in your favor. Let me show you a similar trade I've taken yesterday and how I executed it. Yes, Jad, it's Ayman at BeagleTraders.com. Let me type it for you. Hopefully I didn't make any spelling mistakes right there. So look at this. This is me yesterday getting into Baba ABCD pattern. It's actually written there. Now that I've taken it, we know that the ABCD pattern is a breakout pattern, right? So you definitely don't want to just exit closer to the high of the day, being afraid that it might make a double top. Yes, it could make a double top and drop back down. Because of that, we're taking the partial at the high of the day. But if it's strong setup, it would just continue, right? So you need to leave some for the breakout for the trend. Edwin. Let's see your BP trade. This is a parabolic. This is really parabolic. And it's obvious by the line if you draw it, right? This is actually not so parabolic on the 1 minute chart. On the 2 minute chart, it looks more parabolic. I mean, around here, it's definitely not parabolic, but I see that it's starting to get more steep down there, right? A hammer at the low of the day, new 1 minute high. Now, this is what I don't like. It's not so extended from the 9 and the 5 minute chart, right? If you just look at it, what is this play right here, guys? What is this setup? Exactly, Edwin, good. So this is exactly, Julian, Chris, this is a 3-bar play. You're having a stock dropping down, small bar in between, small, another big candle dropping down. Now, I told you that I love parabolic reversal on the 3rd consecutive candle. In this case, I wouldn't count this as 1, 2, 3. I would count it either as 1, then I'm waiting for 2 and 3, or you could count it as 1, 2, and you want to see a 3rd as well, at least something like that. Because of this, I'm not taking a parabolic reversal on this candle or within the range of this candle. I want it to be more extended, right? There was a consolidation here, and this is why I told you, like, in this case here it doesn't look parabolic because it dropped down, it did a small consolidation. This is not a bad play, by the way, to the short side, right? You're having a reverse ABCD pattern, 3-bar play with a good confirmation on the 1 minute chart as a descending triangle. This is enough clear, by the way. Now that it's dropping, it's definitely looking good for a long, but I wouldn't take it only because of my rules. And you could see just pulling back a little bit, making another reverse ABCD pattern, and dropping more down, unfortunately. Yes, Sal, 3 consecutive candles on the 5 minute chart. Decent sized. If you see like 3 candles like this is not good, right? You need them average size or 2 big sized candles. Okay, let's see Avi. Avi traded BBBY today. I actually traded this one today and I traded it a lot. I'll show you how I traded this thing. I got one big loser on it, like a really big one, because I messed up with my ads because of my confidence. But let's see what you have right there. This is the 1 minute candle, right? And I want you to tell me, did you enter on it immediately after it opened and it started coming back up? Let's see this. 30 seconds after the open. And what made you put this as your stop loss? Was this the low of the candle by that moment? Okay, not bad. Now I'll share with you my trade after that and I'll tell you why I didn't enter on it. I see that you are entering here one more time, which is not bad. This actually was a good entry. I got a late entry on this one. Partial somewhere around here. I wouldn't have partial here. It's just too early, right? The closest swing high is somewhere up there, which is not bad. Good, perfect. Another good partial because of this reverse hammer, adding and exited at break even. This is the good thing. I actually did similar thing you did right there. I had those ads right there, which got me stopped out eventually. Then you are entering one more time, partial, and exiting the rest at break even, which is amazing. This right here, we're having a fake breakdown on a strong stock, which gapped up a lot today, right? And then it's getting back into the range. When a stock is breaking the range and getting back into the range, that's a weak sign. I mean, in this case, it's strong sign, which made this setup really good. You're taking it to the long side, partialing all the way up, and then exiting the rest at break even. Let me share my trade with you on BBBY. BBBY, no, BBBY, perfect. So BBBY, look at this. This is my first entry on it, right? To the long side on 1 minute high. I waited this here because I didn't like the cross, and I got used to that. Stocks usually pull back to the cross and then drop back down. I wanted it to break with the 1 minute high, because of which I got slippage. I enter, I'm adding to my position, partialing at the high, adding at the hammer. This was hotkey mistake. I didn't want to do anything, but I partialed, and because I partialed, I added the position which I partialed, adding more to my position, and stopped out. I lost 2 hours on this trade overall. Yes, I took a partial, but I heavy added, and it dropped down, and I lost 2 hours on this trade right here. After the doji, I'm entering into my position, adding at the break of the high of the day, adding at the pullback, right? Partialing at the break of the high of the day, adding one more time there, getting stopped out. Another -1 hour overall, even though I partialed. So basically I was down 3 hours on BBBY. This was a quick scalp play based on the level 2 and the time it sells. Then look at this. Good hammer, right? Bouncing closer to a level I have right there. We're having overall higher lows right there. We're having also lower highs. The moment when we almost making a new high right there, definitely would have been better if I waited for a new high right there. We're having high, high, high. We're having a low, right? Higher lows, lower highs. The moment we're making a new high, would have been better for me to wait a little bit. I'm taking it to the long side, partial at the high of the day. Now we're having an ascending triangle starting to form, adding for the break of the high of the day, partialing at this level, partialing a little bit up there. And look at this, the 50 moving average, guys. See, the 50 moving average is a strong moving average, especially on trends, right? Adding to my position with this small partials, right? Adding to my position closer to the 50 moving average with some partials. And the moment it's breaking the 50 moving average, and the 50 moving average crosses with the 9 and the 20, I just bail on the trade, right? So this is a good place. If you are getting into a good trend trade, pay attention to the 50 moving average. If you notice that the 50 is being held, you could add as close as possible to the 50, but make sure that your average stays down there. You don't want to increase your average a lot so that you don't lose as much as I lost on my first trade right there. Yeah, overall I made it all back right here. I made around 5 hours in this trade, but I'm up only 2 after all. After commissions, maybe 1 hour up. So the first losses were bad. I shouldn't have lost 2 hours, especially that I've taken partials. Yes, Zach, my max loss for the day is 3 hours to 4 hours. It's usually 4 after commissions. You're welcome. So let's see Julian. Julian traded BBBY as well. And this is clean. Like, Julian was patient about it, right? He didn't trade it anytime before when it was choppy. At the 5-minute chart here, you're having a clear. This is the place where I added, actually. Yeah, I added right here because of this hammer right there. Anyway, this was my add here. If you didn't remember these hammers right here, and then I added there. You added at the break, which was good. It was choppy around here a little bit, right? And you still didn't trade at that moment. You didn't have an early entry on this one to survive pullback. So you waited for a clear confirmation. The moment it broke the high, you're taking it to the long side. At the breakouts, we could put our stop loss at a new 1-minute low. Safer to have your stop loss at the half of the range at least. Taking partial at 2-1 and exiting the rest at break even, right? In this case, I wouldn't have exited at break even. Can anyone tell me why? Why is this pullback a healthy pullback? Not exactly the volume, but that's good also. Exactly, yeah, Julian. So when you're having a clear resistance, what do we usually see? We want to see either a stock shooting up immediately, or breaking out, pulling back to retest, and then continuing. You see that your entry was at the breakout. So after the first partial, most of the time, it could get back to your break even and you'll miss the real move. A lot of times after breakouts, they come back, they retest, and they continue. And you don't want to miss the move only because it hit your break even. No, I can't really tell you that, whether you should do that or you shouldn't do that. It's something just to keep your eye on for the future. And then, looking at your journal, if you see that it's actually worth not moving your stop loss to break even after the breakout on these type of setups, you could do that, right? It's just my opinion and what I usually do. After breakouts, I don't move my stop loss to break even because this is happening a lot and I don't want to miss the real move. Exactly, Danny. Remember that break even is not a technical stop loss. Technical stop loss is your initial stop loss where you had your stop loss for a reason, right? Because it's the level where it bounced from or something like that. Now let's see, second entry 3-bar play. I see there is a 3-bar play right here. It's a bull flag on the 5-minute chart. The problem is it's a little bit late, like it's the half of the 5-minute candle. And eventually you are getting subbed out. I like that you got subbed out. It's just coming back down into the range and then the moving average cross and it just continued dropping after that. Yeah, I wouldn't have taken this one because it was already just a little bit too much, right? Around here it would have been a good entry. Just at the beginning, Remember guys, the best entries on any setup you could get are on the first candle. Chase entries, which are not the best, but they are still decent on the second candle, which you did right there. It's not bad, right? But it's definitely not the best. Worst entries you could get are on third consecutive candle. Those are just in my opinion, or based on my journals. Nagraj, let's see what you traded. Traded BBBY. Okay, that's good. Yeah, I like this entry. We both, I think, entered on that trade right there eventually. You're welcome, Julian. Cows, let's see. Apple. So you traded this thing to the short side. Now this is so early for a parabolic reversal. This is the 5 or the 1? Oh, this is the 5. Okay, it's not the 1 minute chart. I see. This is not bad there. Yeah, I don't like this price action here, right? You're going against a swing high level right there. On parabolic reversals, I need to have some room between my entry point and the closest swing high level. Because stocks, after breakouts, they could just simply retest and continue going higher. And at this stage, the retest area is basically your entry. You definitely don't want to get your entry into the face of support and just have the stock going against you immediately. I see that it worked out a little bit in your favor, but look at this. Where did it go? Yeah, it actually didn't go there. Yeah, it could have just simply went to this level right here as well, right? And then bounce out of here. But at least if it goes to the low, you will have a good risk to reward. The problem is the entry point, right? You're going just into the face of support area. That's what I wouldn't have done right there. Respected your stop loss, get subbed out. So yeah, that's not bad. Leo, let's see what you did. Leo traded NKLA. Now let's take a look at this one. NKLA on the 30-minute chart looks bullish, right? We're having a clear uptrend on the 30-minute chart. On the 15-minute chart, it's basically the same thing. You're having a new 15-minute high. On the 5-minute chart, it's opening a little bit choppy, right? At first, it's opening with a bullish candle, new 5-minute high, then it gets engulfed. So those 3 candles right here are a little bit choppy and I'm not really sure what's going to do about them. Those 3 candles, they're getting clear, right? You're having higher highs and higher lows. It's just slowly starting to curl up. You notice that you are getting in closer to the support. This is the best thing you could do, right, guys? the best entries are the entries on the first candle, right? As close as possible to the support. If you miss this one, you could still enter on the second candle, which is good. But you definitely don't want to enter somewhere up there on the third candle, right? Though this is the 3-bar play, so this could be also considered as the first or as the second candle right there. Now, one thing to remember, and we said that those patterns, ABCD patterns, ascending triangles, and in this case it's an ascending triangle, bull flags, I don't know, breakouts, whatever pattern you're playing right there, though if they are a breakout pattern, you might want to hold to your position for a breakout. You could take partials for precaution at the highs, right? At the highs. But you need to leave at least a little bit for the breakout, because if the setup plays out well and it breaks out, you could also add to your position. You're already in a good entry, right? And if you double your position after breakouts, you only need half of the range as your stop loss, right? So you are already at 2250. If you add a 2350 and double your position, let's say you are out 80% of your position, you have 20% of your position left, you could double your position having 40% of your position. That's not little, that's too much, right? You'll have 40% of your position with an average of 23, which is break even. Basically, if it goes back down to 23, you'll exit at break even. If it continues going up, you will have 40% of your position left for this whole move right there. Nadia, let's see how you traded NIO. So Nadia traded NIO to the long side. Now this is okay, I'll ignore it. Do you know what's your mistake here, Nadia? Another mistake. Anyone, guys, who are attending the trade reviews a lot? What is the rule here on the first trade? I mean, at least my rule. Exactly. Specifically, trading into the 9 moving average on the 5-minute chart. So I have those rules. 1. Never go with the trend when it's extended from the 9 moving average in the 5-minute chart. So basically, I'm not shorting a stock here 100%. Never go against the trend into the 9 moving average on the 5-minute chart. Those 2 rules. When the stock is extended from the 9 and the 5, I would either take it to the long side with the target of the 9 moving average in the 5-minute chart. If the stock is already closer to the 9 and the 5-minute chart, I will wait for it to consolidate and take it to the short side for a trend to the bottom side. And I'll show you how I traded this thing quickly before we go through the second trade. NIO. You see this? This is where you took it to the long side. And this is what I waited for it to do. Because I know that if a stock is making 3 consecutive candles, not all the time, but a lot of times, they start pulling back, especially if the move is parabolic, into the 9 moving average on the 5-minute chart. What do I wait for? I wait for a reverse ABCD pattern, and I take it to the short side with the trend. And best entries are on the 5-minute candle, right? On the first candle on the 5-minute chart. Now let's take a look at the 1-minute chart. You see how it looks like? As a confirmation, I have sort of a descending triangle forming on the 1-minute chart. This is where you took it to the long side, right? Against the 9. And this is what we should actually wait for. Or at least wait for it to break and start making a new move. Taking it to the short side, and look at these guys. I don't take any partials. Why didn't I take any partial here? Because this is a breakout pattern, right? A descending triangle is a breakout pattern. And if it's strong, it will break out and it will run. There it is. It's breaking out. Now, I could expect that after a breakout, it will retest the previous support, right? Or we'll get maybe a little bit into the range. So my stop loss is half of the range. This is the low of the range. This is the high of the range. My stop loss is the middle of the range. Because I know that after breakouts, they usually retest. Now look at this. Let's say I partialed here. Would I move my stop loss to break even? Definitely not. If I do that, I will get stopped out at break even and I'll miss the real move. This is happening a lot. And because of which, after breakouts, if it goes against me, I'm not moving my stop loss to break even. And here I didn't partial because I expected that this would happen. It was just the first leg down. If you look at the 5-minute chart, this is the first leg down. And if you remember my ABCD pattern webinar, stocks do one leg down, second leg down, and usually the third leg down is where it's actually reversing, right? And I added to my position a little bit and exited the rest at break even, which is not the case. Now let's get back to the 1-minute chart. Now look at this. I'm adding to my position and moving my stop loss to the level where it retested. Basically, I doubled my position. And now this is a breakout pattern, right? Since this is a breakout pattern, no need for me to partial at the low of the day. I'm partialing at the breakout, and the biggest partial is at this daily level, 2085. I'm leaving a little bit of my position to run. It's coming up. I see small reverse ABCD pattern. I'm adding a little bit to my position. My average is still high. And I'm exiting here. A little bit of slippage. I wanted to exit right when it did a new 1-minute high, but unfortunately I get slippage there, but that was small. Loser right there. Regarding my rules, I have them written. There will be a success webinar next week on how to make your playbook. And I will share my playbook. It has all the rules. I have all the setups I trade with the examples. Now let's see your second trade. This is good. The second trade is good. Why is it good, guys? First of all, we're having a new 15-minute high. Second of all, you see that the trend has changed. Look at this. Dropping down, pulling back. It dropped down there, pull back. Dropping, pulling, dropping, and look at this. High, low, high, low, high, low. What do we have right here now? High, which is still lower high, low, and higher low. The trend from the bottom part is starting to change, right? This is not enough. We needed to change from the upper part as well, right? Look at this. High, higher high, and higher low. This is amazing. Perfect entry. But remember, when you are entering, your stop loss is what? The low of the wave. And this is an extreme reversal. Remember, guys, what we said on the webinar of extreme reversals? They usually happen in around 11 o'clock time. You want to see a new 15-minute high. You want to see that the trend has changed with an establishment of a new trend. You want to see a cross of the 50 with the 9 and the 20. And then you could calmly hold into VWAP and above VWAP. Why is that? Because we have all the rules here. We're having a stop which is strong on the daily chart, but it is selling off. We're having a daily level right here. You don't have it on your chart, but you saw it on my chart, right? At 2085, which is strong daily level. You are having an establishment of a new trend. You're having a cross, a new 15-minute high. Basically, everything we want to see on a reversal pattern, it was there. And it went all the way to view up and above. Perfect. GS, let's see what you did there. So GS traded NIO, you took it to the short side, which was amazing. You partialed at the low of the day. I think that was a full out on that daily level. Then this is late. This is what we mentioned before, right? This is the best entry you could get. Once it's breaking these highs, you don't want to go above this level unless it's retesting and coming back up for the break. I wouldn't get in here because this is like multiple candles. It would be somewhere at the low. I see that the previous support is acting as previous resistance. Anyway, previous level is being held one more time. Now it's bouncing out of it, making new highs. You could enter either there. I honestly wouldn't enter here because I will be afraid that it will be making a reverse ABCD pattern. But I like this candle, right? I like it. It's being pushed back down. But this candle right here, it's not making a new 5-minute low. So in this candle, I'm definitely not taking it to the long side. I would want to see what this candle is going to do. If this candle is making a new 5-minute low and breaking this 2120 level, I would take it to the short side and put my stop loss up there, having my target levels here, here, and then here. Seeing that it's not doing that and it's actually closing as a doji and then making a new high, I would take it to the long side and having this as my target followed by this as my target. I'll take a look at BABA right now, right? Let's take a look at BABA. So BABA right now, it's looking weak to me. Having a descending triangle right there, this would have been the good entry. Remember, best entries are on the first candle. Chase entries on the second candle. Third candle is just too late. I'm not taking it around here. Definitely the entry would have been on this second candle. Having your target at 289.05, then 288.60, somewhere around there. 30-minute chart looks weak. All the charts are basically looking weak right there. Best setup though would have been if you caught it somewhere right there on those candles, because you're having a reverse ABCD pattern with an M shape. On the 15-minute chart, reverse ABCD pattern with an M shape. That if you could catch right there. Let's take a look at one more trade right there. This is Kaiser's trade. So Kaiser traded PTON. I actually asked him how did he catch this entry right here, because this was at the bottom and I was watching PTON as well. I didn't want to trade PTON to the long side because you could see that there were a bunch of moving averages ahead of it, right? And I told myself I would take it to the long side only if it clears its way, which was somewhere around there. But then it already did a huge move, like this move right here. I don't know how much is that move. That move is around, yeah, that move is around $1.20. After $1.20, I just told myself it's too late and I want to avoid it. He actually opened my eye on the 60-minute chart. This entry right here was a new 60-minute high on a strong 60-minute chart. Sort of an ABCD pattern of the 60-minute chart, new 60-minute high, and he's taking it to the long side. So basically, he didn't care much about the 1-minute chart and how it looked like, despite it's having moving averages above it, or the red candle right there. He played a setup on a bigger pattern, like how it looks right here. He doesn't care about it at all, right? New 60-minute high, taking it to the long side. Not sure where his stop loss was, maybe here, maybe down there. Taking a partial at the high, and then his usual plays. Partialing all the way up, adding at the pullbacks. Partialing on the way up, adding at the pullbacks. And this is something he told me, like, if you are having a really good entry, and this is actually something I also tell you a lot, if you're having a good entry in any stock, you could just ride the trend. You could always add to your position and your average will still be low. So you'll be taking partials. Let's say you are getting 30% right there, then you are adding those 30%, right? Taking 20% partials right there, then adding those 20 or 30%. Taking 30% out and then adding those 20 or 30%. Your average will just get higher with every add you are having, right? Yeah, your average will get higher and you could just partial all the way up. The most important part is getting the good first entry. If you could get that and the stock is trading, no need to bail all out at the daily level. This is something we all need to practice, guys. No need to exit all out at the daily level. Just hold for trend. You know that the market is trading in waves. It will be making the waves. It will be making the new lows. It will be having, I don't know, dojis at the high of the days. It will be having spinning tops. It will be having dojis at the high of the days. It will be having, I don't know, shooting stars, anything. But you know that those are pullbacks, right? They are not reversals. When is the reversal happening? The reversal might be happening the moment the trend has changed on a bigger time frame. He doesn't trade only trending stocks, different styles for different stock. But if he's getting into a trend trade, then why not holding it, right? Exactly. So do you have any questions, guys? Guys on YouTube, if you have any questions, I'm typing my email there. Feel free to email me. I will take open breakout on stocks that are gapping up. Yeah, I will take them if they are below the moving averages. Let's say the stock gapped up, but intraday or in the pre-market it's selling off and it's getting itself below all the moving averages. In this case, I would take it to the short side for an open range breakdown. If the stock is gapping down, but in the pre-market it's trending up, getting itself above the moving averages, then I may take it to the long side. So Mina, it will be next Wednesday in the success webinar. I will about the trade book, the importance of having it, how to make it just in short, and then I will discuss my playbook on that or trade book on that webinar, and I will share it with all of you there. And wait, for the parabolic reversal, you want stock going straight up on the 1 minute chart, and you want to have at least 3 consecutive 5-minute candles. At the high of the day, you want to have a reversal candle on the 1 minute chart. These are the 5-minute chart. On the 5-minute chart, you want it to be extended from the 9 EMA, entry on a new low, and then just write it down. For extreme reversals, it's really tough to explain it here in a few minutes. I made a webinar on it. You could watch it, or maybe send me an email and I will send you the rules, because there are a lot of rules for the extreme reversals. It's not only one setup, there are multiple setups for the extreme reversals. Thank you, Leo. And yeah, guys, have a good day. I will be in the chat room. Trade safe and talk to you later. Bye bye.